I'd throw that in there.
Thank you.
Okay, today we're going to talk about Autochartist key levels. Last week we covered the breakouts. This week we're going to cover the approaches, which is a suitable methodology or strategy for traders who like to look at a market ahead of time, engage their risk-reward, as well as being an attractive tool to use for swing traders, those that like to sell at resistance and buy at support. So before we start, we're going to take a look at our disclaimer as we usually do. Autochartist service includes chart pattern identification in respect of foreign currencies, commodities, equities, and stocks. There are potential risks related to investing and trading. You must be aware of such risks and familiarize yourself in regard to such risks and to seek independent advice relating thereto. You should not trade with money that you cannot afford to lose. The Autochartist service and its content should not be construed as a solicitation to invest and or trade. You should seek independent advice in this regard. Past performance is not indicative of future performance, and no representation is being made that any results discussed within the service and its related media content will be achieved. All opinions, news, research, analysis, prices, or other information is provided as general market commentary and not as investment advice. Autochartist, MDIO software, their members, shareholders, employees, agents, representatives, and resellers do not warrant completeness, accuracy, or timeliness of the information supplied, and they shall not be liable for any losses or damages, consequential or otherwise, which may arise from the use or reliance of the Autochartist service and its content. Okay, that being said, today I'm going to start out the webinar with a couple of questions. I was looking over the material over the last couple of weeks when this new program came out, this new feature on the program, and I started to see the words simple and simplified and things like that. So I decided that maybe I should turn it up a notch on my end and talk about some of the issues that a person has to go use before approaching this simplified approach. So I needed to know a little bit about the people out there. We could have some sophisticated experts out there. We could have some newbies. So I just need to know so that if I use terminology, that I define it and I explain it, and that I'm not just rambling on. So here's a poll question that we posted here, and so I can get some information. Okay, now for a novice trader, it's usually somebody who's trading less than a year. Doesn't matter if you're profitable or not. I just want to know, how fresh you are to the markets. The experienced traders, usually somebody more than a year, and you could be experienced in making profits, and you can be experienced in making losses also. And the expert trader, I consider maybe somebody who's traded over 5 years and they are profitable and they're still in the game. So if you can take some time to answer that. All right, looks like we have a pretty good balance here, so I'll be able to move on. The thing is, I don't use terminology that isn't familiar, but sometimes because of my experience of working with traders, pit traders, and different kinds of traders, I throw out some buzzwords that you may not be familiar with. I also need to know how long you've been working with Autochartist, so I can gloss over a couple of those that you may know about, and then at other times I'll try to emphasize certain features that you may not be aware of. All right, so that's the second question there. Okay, that's really good. So we've got some newbies here, quite a bit of new traders, so users. So that's good to know. All right, so moving ahead, we're going to look at slides and we're going to look at live data. As you know, about 30 minutes ago, the U.S. released its non-farm payroll number. So there was activity in the market. I'm sure if you watched it, you saw a spike up in the euro and a spike back down. Usually, just to tell you a little bit of a tip on what happens there, when you have a two-sided number like the unemployment number, you're going to get a base number such as the actual non-farm payrolls. And then you're also going to get a percentage change in the employment rate. So when you get a two-sided number like that, you tend to get spikes in both directions. There are reports where you only get one number, so the market will trade in the direction that number suggests. So just so you know, whenever you get a report that has two numbers, that you should watch for the whipsaw in that market, because sometimes, very rarely, do you get both bullish, and most of the time you'll get one bullish and one bearish, and that's what produces the spike in the marketplace. For example, today the guess was 125,000 jobs. It came out 120. So that was basically a little bit bearish because they missed the mark. But on the other hand, the unemployment rate dropped, which was bullish. So you could see the market spiked up on that, but then overall it began to break on the other news. So that's just a tip, because when you're dealing with breakout methodology like Autochartist has, either in the chart patterns or in the key levels, you need to know what's going on so you can approach it. All right, now first thing I want to say is I've inserted subliminal messages in here so I don't have to repeat the whole thing. But basically, we're looking for signals, automated signals generated by Autochartist that approach support resistance or break through support resistance. This is going to be a review for a lot of people, so I'm going to go fast because I have a lot of slides. All right, both types of these signals create actionable trade opportunities. That's the thing you want to know. This is not a it's cut out the work. It's cut out the work that you have to do to get to these levels. It takes you to the levels, so all you have to do is be conditioned to trade the market, to take action, and that's a huge benefit. So again, it takes a lot of the guesswork out of it. If you come in prepared and you learn a few of the things that I teach you today about outside influences on the market that may affect whether a market's going to stop at a resistance level, for example, or break through. All right. Other thing is it's a tool. Okay. Remember, it's a tool and it gives you a quick overview. Okay. And like any tool, it can be used incorrectly. So it's important that you follow a strategy, you have a plan, and that you know the benefits of the tool as well as the pitfalls of the tool. I always tell people that you know, I could use a hammer to pound in a nail, and I could also use the handle of a screwdriver to pound in a nail. So you know, there's a difference between the two. So like any tool, use it correctly, and it'll take care of you. If you use it incorrectly, then eventually it's going to turn around and bite you. All right. Also know that it measures over periods of time. I'm a big fan of pattern, price, and time. I think that you have to use 3 and at least 2 of those indicators. If you notice, a lot of things that you buy, software or things that you get in some programs and some platforms, it's all price oriented or it's all pattern oriented. But you need to know time and you need to know price. So the fact that length of the patterns is listed is very important to a trader, to know how long a market's spent forming a chart pattern or a Fibonacci pattern or a key level. So that's what's one benefit of that I find in this program. Also, here's more subliminal messages. You can see that I've made them bold, so you're supposed to notice that. Actionable opportunities, that is the key. You are not going to have to spend a lot of time digesting what the market is saying. It's a simple indicator, and if you have the background and know what's going on that particular day, and that includes knowing reports that are coming out, know whether you're trading the opening, whether you're trading after lunch, on the close, whatever it is, you need to know all that going in. But once you get a particular signal, then you should be poised to take action. All right. Also, know that we can combine these and get confirmation signals. All right. I don't think that there's one indicator out there that is the holy grail, but I do think there's consistency in the market, and that means that there are going to be horizontal price levels, there are going to be diagonal price levels, and the combination of those two, when they cross, they create dynamite situations that could be explosive to a trader. Okay, because you have to remember that when you're doing technical analysis, you're looking for areas that are going to be attractive to the masses. Okay, I'm not saying trade with the crowd, but I'm saying is that you want to trade in areas of activity, something that calls attention. And diagonals crossing horizontal points are very attentive points. They're things that traders notice, and that's where the activity is, and that's where you should be prepared to trade. Okay, you know from watching the markets over time that there's a lot of times when there's absolutely nothing going on. All right, that's same for a small trader as it is for an institution or a hedge fund. Nobody is trying to force the market to do anything when there's low volume and there's low volatility. Okay, however, low volume and low volatility should be watched because through the nature and the mathematics of the market, they lead to high volatility and high volume. So if you have an edge, if you're going to get an edge in the marketplace, it is that using chart patterns and horizontal and key levels, they're going to give you an idea of something that's going on. When that alert pops up, that's going to tell you, as I said several times, that you're going to be taking action soon. Okay, you're not going to linger in it for 4 or 5 hours. That something's going to happen, and usually it's fairly quickly, sometimes within 30 minutes, sometimes within an hour. And that's what the program's all about. All right, here's the first question so I can get a sip of water. True or false? It is suggested that key levels be combined with other forms of technical analysis to get the maximum benefit. And it looks like I've done a good job emphasizing that point. All right, that's good. It is true. You need to combine, as I said, combinations of horizontal lines and diagonal lines can produce deadly combinations, and that's very important. So we'll talk about other things later on as we move along. All right, now another thing is it's going to follow the theory of support and resistance. And basically, you know, I don't know if there's anybody out there who studied physics or anything out there, or architecture, but a lot of these things come up. We use sayings in technical analysis like the height of the market is determined by the length of the base, that old support becomes new resistance, and old resistance becomes new support, or different things like a market price will remain resistant until a force acts upon it. You know, things like that. You can think about physics like inertia and gravity and things like that. I've read theories all over the place. I'm aware of people that use biological indicators to trade markets and things. So what we're following here is basically the theory of support and resistance. Okay. In other words, if something is taken out like a resistance point, to the eye it looks like it's going to continue higher. Some people may say a trend in motion is likely to continue in motion, and a trend at rest is likely to continue at rest. That's like Newton's law of inertia. So I know I'm kind of quirky, but that's what I do. Anyway, you don't really need a heavy explanation, but I'll explain the mechanics of that and what actually goes on with these breakouts take place as I move along. All right, you're going to get advance warning, and that's key. All right, you're going to see approaching markets, and that's key too. So you're not going to get a signal when the market is right on top of the point. So you're going to have some time to develop a strategy as the market approaches a support and resistance line. All right. You're also going to see that, as I mentioned before, you must know that this is important because this is repeated, that you combine it and you look for confirmation signals. Okay. And you can use it with Autochartist Fibonacci levels and key levels. And if you have MT4, you can also combine it with additional things like moving averages, Gann angles, and other directional indicators. All right. Now, here's the first thing I want to talk about, and that's the list. When you bring up the data, you're going to get a list. And on the left side, you're going to see breakouts. And on the right side, you're going to see approaches. Okay, we're going to be talking about approaches today. But a couple of things I want to point out, and this doesn't happen all the time, but what happens is the market is going to approach a level first, and then it's going to break out. So you know the logic is to go from this side to this side. It's just like when you watch chart patterns, you're going to have emerging, and then you're going to have completed. And one thing you may want to notice is that you see this length here, this 277 breakout length, or this 27, or this 59. Well, if you go across here, you'll see that there's a 277, and there's a 59, and there's a 27. So at some point, this market, or Autochartist, identified this market approaching, and it's going to tell you the time it approached and the date. And so you knew at that time that, say at 2300 hours, and again, it gets set up for local time, that this 59 length UK 100, which is like the equivalent of FTSE, it's index CFD, that on the 30-minute chart, it was approaching resistance. And that if you look, oops, we go back here. If you go back here, you'll see that 30 minutes after midnight, or hour and a half after this signal, that you actually had a breakout. Okay, so you're going to see the rotation from these, from approaching to the breakout patterns. Just so you know, it doesn't happen a lot, but if you do notice it, you'll be able to take a market from approaching to breakout to eventually the exit. So it is possible to get some really good long pull trades that you're in on, you know, maybe an hour and a half before there's a breakout. So that's one approach you can use, is pay attention to the list, pay attention to your times and the lengths, and then if you do get in the market, that you're able to carry it from being an approaching market to a breakout. And you're going to put yourself ahead of the guys that are trading some lagging indicators like moving average crossovers, or maybe stochastic crossovers, or RSI overbought signals. You're going to get it ahead of time because you're using pure price action here, as opposed to the other traders who use curved data, or I call it massage data, like averages and things like that. And so you may be trading it maybe with a group or with friends, and you may consistently get alerts faster than they do. And that's one advantage of using the Autochartist program. Now, if you look at it, here's what an approaching chart looks like. All right, you're going to see this, that as the market starts to rally up towards a certain area, Autochartist is determined under certain conditions that this is a resistance level, okay? And it's going to put in a vertical line, and it's going to show you the date and the time, and it's going to show you the horizontal line at the price, okay? Now, as you approach this level, you should pay attention to the length, for example, and also to the significance. You can go anywhere from 1 to 10 on the significance. Okay, we're just looking at anything right now for these slides because I'm not looking at any particular weights. But I do know that the longer a market spends creating a pattern or a resistance level, that it's important. Also, the number of touches of a resistance level that are important. But there's also little things going on up here that you have to pay attention to. Namely, you have to pay attention to what happened here. There was a big bar. All right, so you're going to have to ask yourself, is this going to be continuation, or is this going to be a change in trend to the other side? You also should note, and I'll be blowing this screen up later, is what's going on as the market's going back up towards resistance. Okay, you're going to see that, is it making higher tops and higher bottoms, this little swing here. Can I place a trend line in here and see that there's a trend? You also may have an indicator on one of your charting programs that show you volatility or volume. So all those things are going into effect at that level. Now, one thing that I always want to talk about is, in my experience as a trader, and I've worked again with for a while in this business, and also with floor traders and professional traders, is that we think differently than, say, the average guy out there. We think of where our exits are first. So I don't look for entries. I know I can get in anywhere I want to. You can just push the button and you're in. But the idea is you have to know where your exit is first. All right, so I look at these horizontal lines as a point where I could say, if I am wrong, I'm getting out when this line is taken out. I'm not looking at it as a trader who wants to sell it when it touches it. You know, that type of trading is difficult for me, because if the market's going up, I'm thinking contrary, that I should be going up with it. Or if a market's going down through support, I'm thinking I should be going with it. type of trading that I like to do and the people that I associate with, we like